Hey everyone, and welcome to another episode here at our YouTube channel. If you have not subscribed yet, please make sure to click on the subscription button as well as the notifications button so that you can stay tuned to other amazing topics that we're sharing here in the video. So today I want to talk to you guys about how do you strategize and put together a real estate deal using 100% finance money. And one of the things that I would like to go over is that sometimes whenever someone tells you that you can finance 100% of the deal, they're not lying. They're actually telling the truth. But there's so many different ways to do so. And one of the things that we do here at eFunding Experts is that we specialize in raising capital for entrepreneurs. Whether you're a restaurateur, whether you're a real estate investor, or maybe perhaps you're just looking to start an idea, a project. Maybe you're an inventor. It doesn't matter what you do or what you're using the money for, we can help. And see, there's so many different avenues, different relationships that we carry ourselves with. That's term loans, lines of credit, we use hard money loans, we use some private investors, hedge funds, we use specialty lenders that are only dealing with teachers, people in the entertainment industry, you name it. The key here is trying to figure out where is the money. The money's out there, we just have to find it. And so we've been doing this for about 15 years now, and I can tell you that there's so many different ways to raise capital. But one way that we're going to discuss today is 100% finance using real estate, and also being able to leverage your personal credit and also your personal income. So let's go ahead and get started. First, when you're looking at properties, you want to look at what's out there that's going to give you enough profit, right? And a lot of you guys that are new to real estate, you definitely want to look into some other videos in YouTube and also get acquainted with people in the local real estate groups such as RIAs. You can actually look online to your local RIA, which stands for Real Estate Investment Clubs or Real Estate Investment groups that are out there, such as Meetup or Eventbrite. And so you want to look at some of the other, what are the other investors doing to find deals, right? And that's going to be a whole different topic, a different video. But for us, when you look at your margins for a property that you're looking to purchase, the first thing you want to do is you want to figure out if there's going to be enough meat on the bones. And how do you do that? Well, first and foremost, you submit over a request for a quote. The quote, we're doing it based on the information that you're providing to us, such as what's the purchase price. You also want to look at what is the repair cost, and also we want to look at what's the after repair value. Based on that information, along with an estimate of your credit, which again, we're not doing any hard pulls or any soft pulls at this point. We're only going to go off of your credit that you believe you have. So if you tell me that you have a 700 credit score, we're going to take into consideration that score, and then we're going to give you numbers based on that information. If your numbers are wrong, or maybe perhaps they're not as accurate, it's okay, because we're going to go back at some point and we're going to verify that information through an appraisal, and then we also do a soft pull. That's good for about a year. Having said that, the process then after, it goes through our underwriting team that will give you official numbers once the appraisal is ordered. We will give you a soft quote. If you like the numbers, everything's good, you go ahead and give us the green light. We provide you with an actual application that's going to be about 2 pages long. We want to know your exact credit. We want to know your history with the projects, how much experience do you have. And then we also want to look at the property. So that's when we ordered the appraisal. Once the appraisal is ordered, that's when we verify that the property is worth it, right? Because we're not going to invest in anything that's not worth it, let alone we don't want you to invest in something that's not going to be worth it as well, because we're using the property as collateral. So we want to make sure that the numbers are good. Having said that, we can give you up to 90% of the purchase price, 100% of the rehab, and we can do that within a period of an average of 2 to 3 weeks. Can be less, but it's depending on the appraisal company at that point. Once we go through this process, you're gonna know how much money you qualify for, right? So just for easy math, let's just say that you're looking to purchase a property for $100,000. If you get a property for $100,000 and we give you 80% of the purchase price, so you're roughly going to be needing at least $20,000 that you have to bring to the table out of pocket, plus closing costs. So hypothetically speaking, let's just say that closing costs is an additional $10,000, right? So now you need to bring to the table $30,000 in order for this $100,000 deal to come through, if we're giving you 80% of the purchase price. If we're also giving you 100% of the rehab, you do need a little bit of extra cash so that you can cover those rehab costs, because lenders typically don't give you the rehab cost up front. That's something that you have to invest first, fix the property, gather the materials, pay your contractors. Once the work has been done, that's where we call a draw, and you apply for this money so that we can provide you a rebate or a refund back into your account so that you can get that money and pay any contractor, or perhaps if you've already paid them, get that money back. So having said that, you're looking at $30,000 plus perhaps maybe another $10,000 to $15,000 that you need to have in the bank so you can have enough money to work on the property, right? So this deal, you need to have at least a minimum of $45,000 in order for you to close on this deal. Now remember, $45,000 is including the closing costs, some of the rehab budget, and also the down payment. So where are you going to get the $45,000 from? Well, that's where our other program comes in, and that's where we offer the term loans and the lines of credit. Now, our term loan program and our line of credit program is based off of your personal income and also your personal credit. As long as you have a 680 FICO score with very minimum inquiries, roughly less than 4 ideally, and also your debt to credit ratio is less than 30%, debt to income ratio less than 40%, now we can get you up to $300,000 or more in cash that you can use however you like. Whether you're purchasing the property in, you can actually purchase the property in cash if you get $100,000 or $200,000, but you can also use it for paying contractors. You can use it for the down payment. Now you can also use it for anything else that comes about. Having said that, you only need $45,000. So what do? Do you take $45,000 or do you take $100,000, right? So it's gonna be up to you. How many properties do you want to purchase? How many properties can you afford doing, all while you're getting this money? There's always going to be a cost, so remember that. The faster you get a deal done, the faster that you'll get out of all of these different types of financing options, and you'll save a little bit of money here and there with the interest and whatnot. But don't let that scare you though, because remember, interest rates, they're only temporary. What you're looking for is the exit strategy. How much profit are you going to make? So on this deal that we're making an example of for $100,000, we're giving you $80,000. You're bringing $20,000 to the table as a down payment, and you're also bringing roughly about $10,000 for closing costs, and you're putting a little bit of change in your pocket so that you can cover some of the rehab. So when all said and done, you basically just finance the deal for 100%, because we're giving you both options of the first hard money loan, and we're also giving you the gap money. You can finance 100% of your deals, And if you don't have the credit, look for a credit partner. Look for someone that does qualify, because following that qualification, you can certainly grow faster than using your own money. If you have cash, great, use it. But remember, you still have to make those monthly payments in the meantime, so you want to be able to be smart about it, use other people's money, and especially if it's the banks. You have options. You're not sure what you qualify for? Go ahead and fill in the link or click on the link below and see what you qualify for. We do not charge for any pre-approvals. We simply want to see what's out there for you, and then we're gonna work our butts off so that we can earn your business. Again, this is Jose Baeza. I hope this video was informational. I'm very much looking forward to talking to you guys or having one of my teams talk to you guys about some options. But if you're looking for more financial security when it comes to real estate, you come to the right place. We have many different alternative funding options, and this is just one of them. So again, this is Jose Baeza with eFunding Experts. Talk to you guys soon.